honest insights right here.
Welcome back to Indie Housing Market. I'm Kyle Morris with Morris Property Group and FC Tucker.
And I'm Shelly Walters with the Shelly Walters Realty Group and FC Tucker.
And this week we have Mark Lewin on again. We've had you on before. Legend in lending. What do we call it? Do we call it loans, lending,
mortgages?
What do we call that?
I can't say that on the air. Residential mortgage banker.
There you go. I like that.
I didn't know you'd be called a banker.
Yeah. Guild is one of the nation's largest independent mortgage banks. We're self-funded.
No, so you don't sell it off. Is that what that means too?
We service 80 to 90% of all the loans we write.
That's why I like Guild a lot, is that they do service a lot of their loans. Yep.
And you know what, though? I've never understood this. Maybe there's something to talk about was, why does it matter? You're still paying the same mortgage to whoever.
So for me, I'll tell you as a consumer why it matters for me, or as an agent why it matters for me. I think it's a personal preference on what you want out of the relationship, right? And so for me, first of all, if you go with a broker rather than a bank, you're going to be able to shop rates a little bit better and shop programs, loan products a little bit better. So you have more options, right, with a broker. And then a broker that specifically services their loans, I can call if I have a question, and I don't have to have a call center. I can get a really quick answer. Like, it's just a much more personal relationship. And even if I'm so big on personal relationships, I will pay a little bit more for a personal relationship so I can have peace of mind and comfort. And some people are like the dollar amount people, right? Like my wife is the opposite way. She's like, well, we're going to save $20, so we'll do this, right? And so I think it's a personal preference on how you operate. I guess that's my experience. I guess it'd be better to ask you, but as a consumer, that's how it works in my head, and that's how I.
So you stay with your loan officer the whole time, which means you do know the phone number and the person to call when you're having issues. Or
correct. There's a 20% chance per what he's saying that they could sell it off or whatever, but even then, it's going to be a phone call and explain to me.
It's great for relationships because the client, we want clients for life, and so a client calls, whether it be 3 months or 3 years from now, hey Mark, my home insurance or my property or my payment went up. Can you tell me why?
Yeah.
Well, your taxes went up, your home insurance went up, but I can go right into the servicing portal, I can look that up, and I can get an immediate answer for them, as opposed to calling 1-800, I hope I get somebody.
Yeah.
So,
well, even when I call
and
deal with, like right now we have one that I'm dealing with that's supposed to close in 2 days, and there's going to be a VA waiver on it, and it's through one of these large companies, and I sent 3 emails to finally get a response on an update, just an update, which is insane to me. Versus like I could just call you and be like, "Hey, what's going on?" Be like, "Appraisal's delayed by 2 days. Just we'll do an amendment. I'll let you know in a day and a half what we're going to actually kick it to." That's all I need half the time is
a human person to talk to you.
Well, sometimes not having the exact answer is answer enough to let my client know the direction, because I'm in the information business, right? And the more I don't have any information, even if the information is we'll know tomorrow, like I get caught flat-footed and my customer starts to have, or my client has a poor experience because they feel uneducated, unsure, unsafe, whatever it may be. And communication is everything to me. And I only have really good communication when I have a good relationship. That's my personal.
Well, Mark's really good at that, because I know when I make offers with Mark is talking about, as a listing agent, the lender on the other side is scary when you see who's coming across who's a lender. I just got one this past weekend on my listing, and it was Chase. And I was like, yeah, no, I don't think so. And that's my first thing. I'm like, I haven't even looked at the offer yet, but Chase scares me, But you can't get a hold of the lenders and ask questions. Or some lenders say, I'm sorry, I can't talk to you. I'm like, I kind of need to know, are we closing? Like, I can't answer your questions. To that point, some lenders are like that. Mark, you're an open book. You've always been great. And especially when I present offers, he's right there and immediately reaches out to the list agent and says, hey, they're good. That's the kind of relationship. That's why I love working with Mark, is it's from the very beginning. Mark is in with the listing agent, letting them know and comforting them on the whole process is, I'm here for you. So that's important. I get that. That's totally different from the mortgage process after it closes. But the communication is so good with a lender. It's very important. And when I call a lender and they say, no, I can't answer that question, I know you can, because you do.
Right. We don't violate anybody's personal or information or privacy.
Yeah, I'm not asking for that, right?
Right, exactly. So it's everybody's entitled to the information. And, a doctor told me a few years ago, knowledge is power. So the more informed all parties are, the more comfortable they are in making decisions and moving forward with the process. And then the number 2 question I get asked is, are you local?
Yes.
Where do you live? I live in McCordsville, right? And people like that. Oh, okay, we know where that is. You're very much a local person, and we're not calling somebody in Colorado.
Right.
Yep.
So,
Well, and I have buyers who come to me from out of state, and they come, I've got a pre-approval, and I'm like, with who? And it's either an internet bank or somebody there, and they're like, well, they work in all 50 states. And I let them know, I said, our offers are very much dependent on who that lender is. And if you've got an out-of-state lender or somebody that I can't vouch for, it can hurt you getting an offer accepted.
agreed.
We just had one that fell apart and ended up, it's actually closing today, and Guild picked it up, and they had been pre-approved. And as somebody who works in a trade and was going to the union, which I learned some stuff on this, right? And so all of a sudden, it was based off of hourly, and union hours are not guaranteed, right? And I didn't, and you guys knew all about it, hey, we can't do that. And we ended up getting it all done and everything. But I mean, we found out 2.5 weeks in that it was dead, when really there was just a different way that needed to be done. But it was a larger lender that is not local, and they basically just took an offer letter and ran with it and didn't ask any more and didn't pay attention to the fact that union hours are not guaranteed, right? And so
Variable income.
yeah,
Yes.
I've been doing this almost a decade and I didn't know that, because I mean, I deal with union people, but by the time it's just all taken care of, I guess, if that makes sense. So I didn't. Did you know that?
No.
So it was an offer letter, and so it's like we even were going to get a a letter from where he was going to work for the first year, guaranteeing, because in the letter it said we guarantee 40 hours, but there's just no way to do that with a union, because you report to the union, and then as they have jobs they put you out, so you could be off for a week on accident, and so it's totally different. It was a whole thing.
But he still got the house.
He did get the house.
Because of Guild.
Yeah, this is going to be a short podcast because I got to get to the closing. But because of Guild, 100% because of Guild, and because of at your branch in particular, there was the ability to. There's so much experience there. It's how do we get this done? And that's all it was. It was you guys collaborate and figure it out how we can actually serve the client and get the deal done.
Well, I think it's about the relationships too, because like you said, you want a client for life. So you're sitting there working with them and hoping they call you again, and they're local, you're local, so that could happen. When they're not local, if they're out of the state, my whole thing say to my buyers is, they're just running numbers through there, and they really don't care. They know this last time they talk to you is the last time they're going to talk to you,
Right?
Because they're just this clearinghouse of lenders, and I think agents just don't understand that. And there's a lot of agents. I asked them, I said, well, who is this lender? I don't know. They got it, and I'm like, why aren't you kind of in control? I'm not saying we control the whole situation, but in control of who they're using as a lender, because I'll have people come to me and say they have a lender, and I'm like, will you use one of mine, please? Because I can vouch for them. And I know you'll close.
Sure.
And stuff like that.
And there's public records that you can research the lender. You can go to the NMLS Consumer Access site. Did this yesterday for a client, and I never light my candle by extinguishing somebody else's, but the public records pointed out the gentleman they were talking to had exactly 3 months experience in the mortgage world.
Oh wow!
Really? I didn't know you could do that.
NMLS.
NMLS, and there's NMLS Consumer Access, so you can go. Anybody can go to that site, enter in the name of the loan officer. It'll tell you where they are, how long they've been there, what they did before that, and it doesn't give production numbers, but you can see oh my goodness, this person has been 6 different companies in 3 years.
That's very good
If that,
information.
and a lot of people, you talk about experience and knowledge, and in that particular Guild branch that I report to, Jack Overy is the branch manager. We're talking 150 years combined mortgage experience.
Yeah.
So it's a lot of solid.
So
people
on
there.
that, does it? You just put their name in?
You put their name or their NMLS number.
Okay,
And
that'll be on.
Because you guys have to post that on it.
Oh,
It'll be
yeah.
on the pre-approval.
Yeah.
Why do you guys have to post that all the time? It's slightly annoying.
Well, you have to be licensed.
Okay, fair.
And so,
You
and then
put
that
yours
will,
on a lot of things too.
I don't put my license number on anything.
You should be putting on your contracts.
Well, no, I don't. I put
It's on your listing contract.
my
It has to be
MyBoard
there.
number.
On your listing contract. Your,
It is. It's at the bottom. It's
Yeah.
at the bottom. But I don't memorize that, dude. I don't put it on. They have to put it on social media stuff.
oh yeah. equal housing opportunity, all the good
That's
stuff.
what yeah, like everything I see that an LO post on social media has and it's hard to say,
Yes.
NMLS.
What's that stand for?
National Mortgage Licensing System.
Gotcha. So tell us what we need to know. Why are you here? We are having you here because we want to hear what's on the other side of that curtain, as we say, because you are seeing things and we want to know what you're seeing compared to what we're seeing.
Yeah.
Well, from an activity standpoint, Ryan and I were discussing this earlier. I'm always a couple weeks behind what you're doing because you're out showing the homes, and by the time you do, I do the pre-approval, and by the time the offer comes in, it's a week or 2 weeks afterwards. After the initial exactly after the initial contact with the client. So I'm seeing more and more first right contingencies get accepted. Yeah. A lot of that is happening because even though the clients I'm seeing have the ability to purchase without selling, it's not something that they're necessarily comfortable with.
Yeah, we don't really like to do that. So how are the first rights going? How, are they getting closed? Are the other houses selling? Are you moving forward? Or?
I'm seeing it all over the place. So we were talking about this earlier. At the beginning of this month, I believe I had a dozen.
Wow.
2 removed the contingencies and were able to move forward, sold their house. The other 2 to 3 lost out. Somebody else bought a house, and then the other 7 are still remaining. And unfortunately, there's not a whole lot of activity on either side, and it's all price ranges. I operate. I get some lower price points, I think would be a polite way to put it. My average deal, I believe, is $180,000 because I do a lot of Henry, Hancock, Madison County properties, a lot of first-time home buyer stuff. Yeah. We continue to see requests for what type of down payment assistance you have. That seems to be my number one question. Do you have grant programs available? Yes, we do. Do you have down payment assistance programs? Yes, we do. Do you have zero down? Yes, we do. And that seems to be the number one contingency. Even though people have the money, they don't want to part with it.
Right. So it's when I hear that people are making enough, they're not saving enough. Right. And so it's because we don't have enough extra routinely to pocket it away. Right. And so it's like that's the weird thing about the economy right now is like everybody, I don't want to say, I mean, this is blanket terms, but people are making do, but not making headway, if that makes sense. Right.
Absolutely.
Yeah.
I'm sure you've all heard before, at least I have, the average American is not ready for a $400 unexpected expense. They don't have
that blows my mind because that stat is like
it's big,
super high. The one that always shocks me is how many people have like 3 or 6 months savings, and I mean it is an insanely small amount.
It's not a whole lot.
Well, that was all what I was told in my 20s when you were supposed to start being a human, an adult, is that you would have at least 3 months of all the expenses you would have to pay in the bank in case something happened. But
but I never did it. I didn't do it actually till we got into this bit. Well, I take that back. Maybe we did it. Excuse me. I wasn't super involved with our finances when I was younger because I was an idiot and probably shouldn't have been involved in our finances. Besides, all I did was drain them. But when I got into this is when I did it because you get paid so infrequently, especially when you're new. You're like, I don't know if I'm here in 6 months if I spend any of this. Right. And so this business actually created that for me.
The need.
Because otherwise, like, you just don't know when you're new, like what the market's going to do, when your next business is coming from, right? And so I've just never pivoted from that and just held on to it, which honestly I think helps in these situations because I never care like what the market. If you're an agent doing decent, it should never matter what the market is doing because you're in a situation where your finances aren't dictated by the market. And then in my personal opinion, that is when you are best serving your clients.
Absolutely.
Right. So to your point, like first right contingency, we talked about it on last week's podcast. And so that's why I'm glad you're talking about it again. If you are 2 weeks on the market, your only chance of getting list price is a first right contingency, in my opinion. And so if you want that price point, like we've got a couple first rights that we rode with for like 6 months, and they ended up selling theirs and my people got list price and now everything's closing. And like, I bet we have 3 of those going on that we have held on to long-term first rights because those people also like, how sometimes when you have a house, right, and you're like, these are the buyers for this house, right? Like they just love this house. They love the house the way the sellers love the house. And it's like, how do we stick with them? those first right contingencies tend to be those buyers that the house is just perfect for. And so
Well, many
you
times
stay
it's
committed to
because
them.
they don't have their house sold yet. It's because they weren't looking.
Correct. You just happen to be.
It's like, oh, let's go look at that house. It looks cool. I'm like, oh shit, I guess we're moving. But now what? And first rights, though, the way the market is turning in regards to days on market and everything like that, like you said, it's a great way to get list price, because otherwise you're not. It's a totally different market. You were talking about earlier. I would love for you to kind of explain to us what we should look for. I know you have the top 10 rules of what, they always say, don't buy a car, don't buy this, don't buy that. But you
Don't
were
buy a
saying,
boat.
yeah, just anything like that. Tell us what you're seeing now that's being hard at the very end.
Absolutely. The number one problem we're experiencing, at the, not always at the end, but it seems to be, when as a lender, we make that final call and they've got that last deposit or they've got their gift funds and, hey, send me that updated bank statement. Let's see, you've got the funds. And then I take a look at that bank statement and I see Affirm, Klarna, Afterpay. And I personally didn't know what any of this was. I had somebody explain it to me, and everybody offers it. I was shopping for a car part the other day, and when I went to check out online, it asked me, would I like to spread this out over equal
6
payments
months or
over
something.
6 months?
Yep.
And
I literally just saw that last night, and I've never seen it before.
I had a client that got hammered by it last year is when I found out. And so it's on everything you buy,
Yes.
specifically through social media. Mm-hmm. That shit hits your DTI.
yes, it does.
That's
Well,
why
that's what he's saying.
That's
So
nuts.
these are things that are happening at the
Over
towards
like
the end of closing.
$7.
Yes. So now, after 35, 36 years of doing this business, I've added to my repertoire of having the conversation of no one else should be checking your credit. Please don't move money around. No major purchases, no cars, no appliances. To please don't, when the next time you're on Amazon, Walmart, or anything else that allows you to spread it over to 6 to 10 payments, the answer should be no. Because particular client, I get the bank statement, and this young lady had been shopping. And now I have to know what all these payments are, what the balances are. And these institutions are not the easiest to get statements from to confirm what the balance and things are. And so in some situations, I've had to have an uncomfortable conversation. We have to pay this off or you don't get the home. So this is a debt that now is factored in the debt to income ratio.
Over like $100.
Over $100. Because what we don't know is if the payment is 10 months or less, we're good. But if that payment is, we don't know what the balance is, that $35 payment might be on $3,500.
That is so crazy.
And we are
It's
seeing
nuts.
it more and more and more. So I'm having these conversations. Do all your shopping after
Oh,
closing.
dude. Mine was like, man, it was
Or-
like 2 pairs of shoes and
Right.
like something, and like it was just stuff that like he could just buy, and he was like, oh no, why not? $7 instead of like 70, like whatever. And I was like, okay. And then it like we had to pay all of it off to
Yes.
hit DTI all of a sudden.
Yes, this was a $200 part for my son's car.
Yeah.
Would I like to spread it out over 6 payments? And it just reminded me, like, I need to have these conversations
So this
with
is
every
new.
client.
But you're
Okay.
saying it's been around for a while, but you're saying you're just really starting to see this creep
We're
into
starting to see
issues.
it more and more because it's appearing on clients' bank statements, and then we're going back. We normally go back 60 days on bank statements. Sometimes we don't see it on the original bank statement. It's funny, people.
It doesn't populate right away.
Yeah, they break it's the credit bureau is always 30 days behind. The bank statements are always we're always a month behind.
I think that's what happened to like we were getting ready to close and like these all popped up and we're like, what?
Exactly. And situations I was telling Shelly earlier, it's like, okay, we can't populate these bank statements into the loan. You're going to need a gift because if I show this, we no longer qualify.
And then you have to show that it wasn't pulled the next, like you're delayed even longer because I have to now show another set of bank statements
Right.
showing that it's not there, right? Which is like, if
Just
you
because
just
you're
got your
shopping
bank
on
statements, it's a
Amazon.
30-day clip
Yeah.
automatically.
And this
Wow.
this is going to apply to your financially sophisticated client too. It's not just the people that are stretching their debt to income ratio that's the max. I have to have these with the conversation with the husband and the wife, like, oh my gosh, she's yes, she did this. She didn't tell me that she spread it out over this.
It's about a $2,000 rug.
and it seems frivolous, and like now I have to have the uncomfortable conversation. Yes, I know you make a ton of money. Yes, you're putting 30% down, but we need to know how much
what is
What
going
is
on.
owed,
So it's not a big deal that they go and they put it on their credit card on Amazon.
Correct.
It's using, what are they called?
It's
It's a payment plan. That's all it is.
There's several. The three that are most common that I see are Affirm, Klarna, and Afterpay. I'm sure there's plenty of others that do the same thing, but I'm seeing it more and more prevalent, and it's on more transactions than not. Because to Kyle's point, it's just the convenience of credit is so easy.
Yeah.
You know, would you like to spread this out over 6 payments? Yes.
Yeah.
So think his
And then
$200
that-
part is suddenly $24 a month. For
Right.
like, and you're like, whatever, I can swing 24 and like 200, kind of a pain in the butt.
Right.
Maybe I'll give my son the opportunity to pay it back or something. Like, it's just not that deep, but like, you do that over like 3 or 4 things, like that starts to eat up like 2 or 3
Well,
to
the interest
5.
rate on it is high.
I mean, think how close people are on DTI sometimes. You know, like you think you're actually fine, but you may be able to live just fine with your debt to income. But the problem is the ratio is actually like 45%. It's not 100%, right? Like it's like less than half. And so you're not playing with the same gap you actually think you are.
Right.
You think you're fine every month, but like what you're eating up is like, let's say if you're making like a big number, like 10 G's a month, right? But you're spending 6 a month. Well, like you're pocketing $4,000 a month. Like that's a lot. Like you're like, man, we're doing really well for ourselves. But like your DTI is screwed. Actually,
60% of your income, we can't do it. Right? It's,
Have you had any closings missed because of somebody buying a $20 pair of shoes?
No, but had the uncomfortable conversation that
we got paid off.
This has to be paid off.
Wow.
So you've got to resource $800 or $1,000 more because I can't include one more dollar into your debt to income ratio
because we can't close your loan.
And and that is, we were talking. I mean, less than 1% of the United States makes 6 figures. Less than 1/2% makes multiple 6 figures. And so, that's my average client is the one that is pushing the debt to income ratio to the maximum, and it makes a difference.
Are you seeing with any of yours in that price point? I've had a couple of first time home buyers in that price point. Are they falling through because of inspection issues?
No.
Okay.
Knock on wood, I've had not as many inspection issues, unless they're just so bad that you and your good conscience couldn't recommend that they proceed. But luckily, no. I've been few and far between, and we discussed low appraisals, and I haven't had to experience that. But once again, we're a local branch. We all use all local people, so I don't run into those snags like maybe some other lenders do.
We should have some of those guys on. I know there's some.
Who guys?
Some of the appraisals that they tend to use a lot. Like I've had their numbers to call on like other stuff they're not involved in, or I've had to get. I've had some unique properties where I've paid for. We've talked about this on the show, pre-appraisals, right?
Yeah.
And like there's a couple of them. There's a father-son group that's really good.
Probably Tom Hall.
Yeah. And Brandon. Yeah.
Tom and Brandon Hall.
Yeah. And like, man, like I could call them and ask them a question. Like I've got a guy, Chris Thompson, that's really good. And like if I just have a question about a house, not on I would never call them on my transaction, right? I might call them about my transaction that they aren't doing something on.
Right.
And like, this goes back to that personal relationship that like it is like flowed even into some of these people that I can call them to just ask for questions because I mean, Guild is who I generally use on most of our loans, just for me personally, but it matters.
Absolutely.
It just freaking matters. So like all of a sudden, that's why I would use you on my personal residence, right?
Yeah.
So, well, I used them before when they were Caliber on my investment property, and now New Res has that. So that was before.
We'll
that's also why you guys are Guild now.
Yes,
instead
that's
of
why we're all Guild and not Caliber New Resident.
No, I'm not disparaging towards anybody. I've never refied out of there. They've been just fine with me, but it was because of that relationship.
We want to ask you too. What do you see? What do you think you're seeing for the end of the year? What from your side of the table?
Of course, the number one question I get is, Mark, what are interest rates going to do? And I listen to people who are smarter than me, economists, financial advisors, financial planners, things of that nature. And right now, it's interesting. You'll not find a direct correlation in any economy lessons, but gas prices and interest rates seem to correlate. And what I've seen is before the conflict in Iraq or the war in Iraq started, we were quoting 5 point something on pretty much every transaction. And then as the war escalated, it went to 6 point something on every transaction. And the financial advisory firms that I trust in and I believe in are all saying, as you know, we see it. If we go through a 10-day ceasefire and oil prices drop, interest rates seem to drop. And if we start bombing again, everything goes back the other way. So my personal opinion is we get this to an end for many reasons. We'll see interest rates in the 5s. I don't think they're going to get down to the 4s, but we will get back in the 5s. And it will give people that confidence level that I'm not going from my 2 3/4 or my 3 3/4 to 6 3/4.
Yeah.
Make it happen.
Yes.
I've got the thing that I've noticed when I was thinking as we're coming in, right? So he gets asked interest rates. I am seeing cascading prices.
Prices for homes?
It started,
Yeah.
And I just hope it doesn't cause this panic like it did last year of just constant panic and people watching it fall to see where they could catch it at, and then they all got burnt in January, right when it all shot back up.
Well, the amount of back, I say this almost every week, but even more, the amount of back on markets and the amount of price drops is more than I've ever seen since way before 2020.
Yeah.
And I've got in the stats, I actually counted how many of the houses have a price drop right now in the actives. In Carmel, 25% of the houses currently active have had a price drop. And in Westfield, it's 38.
That's
I mean,
crazy.
that's, we weren't seeing them at all, hardly. And now it's this common, I don't know,
You've got a small window to do a price drop and grab people before people just start seeing everybody doing it, and it's like kind of the next week or two.
and then even if there's been price drops, that's when the buyers really go, well, now let's just throw them a
Yep,
low ball
that's it.
offer. I mean, you're just really behind the 8 ball.
Right now, if you price drop, I see buyers going in at list of the price drop.
Right away.
But that's
Yeah.
like you said, you got maybe 3 weeks of that.
Yeah. So I just talked to a seller I have, price drop this morning, and I mean the whole strategy, there is none because
There
it just
is none. That is our strategy.
I know, like I used to, and I was talking to him about it. I said, he's like, I just can't believe we haven't been able to sell it, and I couldn't even tell you why.
Yeah.
And you've talked about it too. It's like I don't know why. This house is unbelievable. It's on 86th Street. It backs up to a forest. It's really cool historic home. I don't know why, and I can't. And that's one thing sitting down with sellers and those conversations. We can't. They're like, "What do you expect?" I have no idea.
Yeah.
I have no idea if we're going to be on the market for a week, if we're going to be on the market for 4 months, because this market is so weird in regards to houses that should sell aren't, houses that probably shouldn't have did. And I was going to, for you to tell us too, are your pre-approvals slowing down at all? Or
Certainly, it's, but I base this future performance on past experience, and 36 years now is I can always count on 2 months of the year being slow, January because it's January, and generally July because people go on vacation. And normally, now that the kids are, my youngest daughter starts back to school a week from tomorrow, and now I'm seeing this
7th, right?
Yeah, I believe so. And so now I'm seeing a tremendous push to, we need to get our address. We need to get our kids enrolled in school. So I do believe that as July comes to an end, we'll see that pick up. There's some other economic factors, but, I could always count on January and July being quiet.
Which is weird because January wasn't, but it was June and July.
Right. Well, you and I both live in the same community, and they have, the school has a flex calendar.
Yeah.
And I personally, I spoke.
Summer is so short.
Right.
Silly.
And I personally, for business, I can't stand the flex calendar. And if you talk to educators, do the kids retain more because their summer vacation is slower? And all the good educators I know will go, we have no idea.
Yeah.
Right. But we've seen a change in that. Now we don't have 2 weeks fall break, and now we have an extra week in summer, and so that's helped a little bit. But yeah, the average family trying to squeeze a vacation into. Are we going to go on in June or July?
I always think back to when I worked at the VA before this, and leave was based off of tenure there, and I can't imagine 2 weeks off for fall break,
Right.
when I was there. Like, all of that stuff changed for me when I got into real estate. Like, that's when we moved over to Mount Vernon. That's when we started to see all of that stuff. And, dude, I would have been screwed at that old
Right.
job with 2 weeks fall break, 2 weeks spring break, right? And, like, I wouldn't have been able to get any of that leave until I've been there 20 years. And even then, those people take that leave, and then they're the people who probably don't need to take that leave at that point because their kids are older, right? It makes no sense.
And it's we're all human, right? We think we want to be busy all the time, but
No, we don't. No, we don't.
One of the particular offices that I work with, consistent, they think you have to have 7 or 8 agents. Well, 4 of them were all on vacation last week. You all go on vacation too, right? I like to go. Well, I don't know what a vacation is. I've heard of it, but
I just work from other
Exactly.
Yeah, the computer.
I worked from Europe for 2 weeks.
Yeah,
this
the
year.
computer just goes with you wherever. I mean, I keep my computer in my car at all times, and I just pull over to the side of the road and just start working again.
Yeah.
So it doesn't matter where you're at, unless you're camping, then you don't have internet.
Yes, internet works
That's
well in
the
Southwest
worst.
Florida and everywhere else they have it.
Yeah.
So it's
Perks of the job, but also you never get a clock out.
Right. Right.
Well, I know you need to get going, and we're going to give our stats because they're kind of interesting. So Carmel, 36 hit the the market, 38 pended. So that was really interesting.
Wow.
So Carmel's doing really good on sales. Again, their days on market and everything. So Carmel's its own little ecosystem. But so 38 total pended, a total of the 15 in 7 days. So that's a lot. Their average days on market for the past 7 days was 23, and the median was 11. Then active, there's 210 houses on the market in Carmel right now, with an average day of 84, a median of 48. So we're almost at 3 months for all the actives. It's
Wow.
210 houses sitting on the market for almost 3 months. And I looked at the price drops. There were 47 price drops in these houses, and that's 25% of the homes currently active have had a price drop. Like I keep saying, that's higher than we've been seeing forever. Sold 157 in the past 30 days, average days on market 26 and 6. So if they're selling, they're selling. If they're not, they're not. I think we've said that every week. The back on markets in Carmel, there were 5 in the past 7 days. Withdrawals 6 and expires 1. So just kind of wanted to give those stats that those are kind of happening. So the Westfield 37 hit the market. 23 total pended that week with an average days of 35 and the median 32. So we're almost even, Steven, on a month for the past 7 days. But over the past 30 days, 162 sold, and an average days was 53 and 14. But again, in Westfield, 277 are currently active. 38 of those have had a price drop, so 15% of the average, or the amount of houses on the market have had a price drop. Average days on market in Westfield is 70 for the current actives. And the withdrawals and back on markets were 2 and 2. So not as many, but we are seeing a ton of back on markets. Zionsville, 9 hit the market, 16 pended there. So loss of inventory, 29 days average days on market, and then 30 days, 48 have sold with an average of 40. But the average, again, for those actives, 84. 10% had a price drop in the past time that they've been on the market. The average days on market in Zionsville is 80. So we're ticking up to 3 months on the market.
And that's
not
the
selling.
average, right? So it's even.
Yeah, that's the average.
It's actually even higher than that.
I saw some of the ones that were, the ones that
100.
finally pended
Yeah.
had been on the market for over 100 days.
Which
the ones
takes
that
us
finally
back
pended.
April. Those were April houses.
Yeah.
Yeah.
And
That's when they
and I
listed.
didn't, to go into a deep dive is to look at each history of those and that
And look
100
at the
days
drops.
and the price drops to
Yeah.
see what made them finally sell. Like, did they sell that day that the last price drop happened? That's getting into a deep dive to try to figure out what's going on.
I'd like to do that sometime. That just takes so much time.
Yeah.
When you're talking about this many houses,
But it would be an interesting concept to try to figure out.
It would. I wish we could make it easier. But there's so much that goes into each house. Like sometimes I can just look at the
Yeah.
pictures and tell somebody why it
Yeah.
it just didn't show well. And Fishers, I got 280 on the market. 45 went on the market last week. 38 are still there. 7 sold in a week, but I had 37 pinned. Right, so we gained 8 in inventory. Average days on market is 42. The median is 13. Noblesville has 246 on the market. 36 went on the market. 29 are still active, so 7 also pinned there within 7 days. But I had 26 pinned last week, and so we picked up like 10 in inventory, which I think that's pretty normal. Like picking up 10 in inventory, like to me, that's just pretty normal market. Average days is 21, median is 11, so that's actually gone down significantly in Noblesville. I don't know. We'll just kind of see as school starts back up, because it's kind of weird right now for me of what I'm seeing, and it's been very quiet. And I don't know if it's like to your point, the vacations, because a lot of people historically take vacations in July, but for some reason this year a lot of them were June.
Sure.
Yeah,
right?
we saw a lot in June.
Mm-hmm.
A lot you still have kids. You guys both do have in school. And I do remember this when you're getting ready to go back to school, like 2 weeks of the first before that day is a busy time.
Yeah, it's
The
built
last
up.
thing you're thinking about doing is buying
It's
a
going
house.
and looking. Well, because the one weekend, so usually like 2 weekends away, you want to cram in the last time to like enjoy summer, and then the next weekend it's like preparing, and that's when you're starting to switch
School
the
supplies,
sleeping
school clothes.
schedules and stuff. I did. I mean, I know we're tight on time, but I was thinking as you were talking about what you see. I heard with a builder. I'm just curious your thoughts on it because I think it's a very interesting loan product. There's a builder, and so you know how historically since COVID, builders have done their biggest competition piece is that they can buy down rates, right,
Yes.
to get them really, really low. And so there's this one that I heard about that is for the first year it's a 1.9%,
Oh my
right?
goodness.
Right.
And then I think like second, I'm gonna murder this, but like you'll get the gist of what I'm trying to say. The second year it's like 2.9. I think 3 through 5 years, like year 3 through year through 5. So like the next 2 years it's like 3.9, and then it becomes a 4.9 from years 5 through 30. But permanent PMI.
Ooh.
And you can't refi until year 11 without paying a penalty for it. So it's interesting.
Paying it, coming and going.
Well, but here's the thing, though. People don't think about it, and so they just hear the low interest rate. It's
Correct.
appealing to the consumer because the consumer's like, that interest rate is
1.9?
Sure. Oh, dude, that's insane. Like, how does that not get somebody's attention? And not everybody understands PMI well enough to understand. So they did a really good job, I feel like, of appealing to the consumers in like kind of the keywords a consumer would know. I don't know. Or like, what if you paid it off in 8 and you just ate the penalty on the rest of the PMI? Like, I had not heard a new product like that in years. So I just thought it was very interesting and fascinating. So I was like, whatever, we got a couple of minutes. I'm just curious what your thoughts are on something like that.
We're seeing temporary buy downs. And it only works if the seller's funding it. It never makes sense if the buyer's funding it.
Yeah.
And my personal opinion is, if you were going to go shopping for a car today, right? Most people base it on what's my payment because that's how they do their budget.
Yeah.
And if they budgeted $800 a month for that car and the car dealer says, hey, I can spread it out over 72 or even 84 months and we get this payment, they don't look at the interest that they paid over that 84 months. All they heard was the payment, right? And PMI is always a combination of your credit score and your loan to value. So for the lower credit score borrower and the higher loan to value, PMI gets pretty salty. Now, PMI is tax deductible, but with alternative minimum tax,
Still money going out the door.
Yeah, it's still money going out the door. Nobody's really able to take advantage of the benefits. And I would be very curious. There's clearly a prepayment penalty.
Oh, yeah.
What is the penalty?
How much is it?
Is it 6 months interest? Is it a year interest? Is it 2 years interest? Because it's in there. It's in the disclosure.
Yeah.
But once again, I guess my comment to any buyer like that is, I hope you're staying there forever.
Correct.
Right. Yeah.
Or at least 20 years.
At least 20 years,
Yeah.
because you're not going to see your return. And I work with some builders. I'm a preferred lender of one builder, and this builder is now changing their fold. Like, they want their price point high. Right, they don't want to take it off the price. You know? And this one particular builder says, one month we offered an incentive. We'll give you $15,000 towards a buy down, or you can just take $15,000 off the price. I'm like, hey, let's stop doing this. Let's keep the price point higher so it helps with your comparable sales. And it's coming from somewhere.
Yeah.
Right.
Oh, yeah, it always is, yeah.
It's usually
You
built.
can't make the money just disappear.
Right, exactly.
Yeah.
There's only so many ways to split a dollar, and it's in there somewhere.
Well, I do want to say really quickly when you started talking about this, it's just
Yeah.
called Mark this morning, and anybody out there, any agent out there, Mark did this for me. The listings that you can't sell, back to offering the buy down, having the seller pay for it, because it really, in the end, does it cost that much money compared to lowering the price and lowering the price and lowering the price when they're really
It's cheaper
looking
than the first price adjustment.
Well, it is
really.
if you can have an agent that can explain to the fact that you can have a lower mortgage on this house versus the other house because they're going to do a buy down for you. So Mark ran it for me. I told him the house, the address, and he gave me the buy down sheet. So my sellers now know one thing: what is a 2-1 going to cost? What's a 1-1 going to cost? And what's a 1 going to cost? So they know. And also, I put it in the listing so that the buyer's agent knows to put this in the purchase agreement if they want it, how much they need. So I'm a big component on actually putting that as part of your listing if you can't sell it. So a lot of these houses have been on the market for 90 days. Mark, I know you're going to give your information, but Mark will run these numbers for you so your seller knows how much they're going to need to do it, because the big one, the 2-1, the most that it was going to cost my seller is $15,000. And
Like
he's talking
2% of the price,
Yeah,
yeah.
so he's talking about doing a $20,000 price point. It's cheaper to do the buy down.
It is.
And it
If you can
stimulates a
explain it
better
to
payment.
Yeah.
Right.
And
Because
so
that's what people care about, right?
It is the payment.
But you got to have a lender who can explain it, in my
And an
opinion.
agent
So
that
that's
can
the weird
explain
thing, yeah, about that loan that I was telling you about. Because people just hear these prices or these percentages, and they don't understand the pricing around it. And when you were talking about it, it made me, because it's like, how long are you going to live there? 4 years ago, I leased a vehicle. My wife did, because she went in office, didn't have a company car, blah blah blah, and then we got back. Anyways, it doesn't really matter. But we ended up getting this vehicle, and they're like, "Hey, we'll do a tire package, right?" And they're like, I don't want to do this. Like, I know how this works. Like, one of my team members used to work in car sales, right? Like, and they're like, no, well, we'll get it down to where it was like $7 a month, right? Mm-hmm. And so that's all they told me about. And so I started looking at it. I was like, man, I'm just tired of arguing with this guy. And then I looked at it, and what he had put us out for was 7 years.
at
On a
$7 month
5-year car lease. Like, I was going to be paying for tires
for a car you don't
on
own
a
anymore.
car I didn't even have anymore.
Right.
But because the dollar amount was low enough, suddenly it's like, oh, okay, well, what's the harm in it? But like, people don't read it and pay attention enough to know what they're actually
And
doing.
to your point, nobody asked me for an amortization schedule anymore, right? And when I first, earlier in my career, they wanted to see well, we called it the good faith estimate at that
Yeah.
time. Now it's a loan estimate, and an amortization schedule, because they could see. I can tell probably 2 times this year somebody's asked me, may I have an amortization schedule?
Yeah.
They don't, they're focused on the payment, not what the long-term costs are.
Yeah.
Or their equity position. Where you want to move in 5 to 7 years. This is the amortization is going to tell us what you're going to owe in 5 to 7 years, and nobody asks the question anymore.
You don't. Because
Comes
people
down to payment.
we
Yeah.
don't.
That's all it matters.
What's my payment? What's my payment? What's my cash to close? And if they like those 2 answers, sign me up.
I like having you on here, man. Like, just your experience, like, just
appreciate
the
being
type
here.
of conversations we have with you are different than a lot of people, just because of your knowledge base and your experience. So if anybody wanted to get a hold of you, how would they get a hold of you?
Call my cell phone, 317-443-8649. And that works on the weekends.
Yes, and I will
And
say
the
that as
evenings,
well.
yes.
Mark will answer the phone, and usually it's not always, but I'm in Florida on the beach. How can I help you? He answers his phone.
Yeah.
So
Doesn't matter where.
My wife knows, this is how we pay the bills and put food on the
Correct.
table. And,
This is why we're in Florida.
Exactly. We're in Florida. And if I don't answer the phone, I get called a slacker. So, hey, slacker.
well, that is one thing about a lot of us are doing our work on the weekends.
Yes.
And you are available.
My wife asked me, like, my wife was confused on what day it was yesterday. I was like, I haven't known what day it was in a
2 years?
couple
3 years?
Yeah, dude. It's all a blur. Anyways, I'm Kyle Morris with Morris Property Group and FC Tucker. My number is 317-649-5122.
Now Shelly Walters with the Shelly Walters Realty Group. My cell phone's 317-201-2601.